When you do exploration, you start off with a geological model. I think it's fair to say it's nearly always wrong when you start. And it's something which evolves. You make mistakes in your interpretation, but every time you make a mistake, it pushes you closer and closer to what the truth is. It's no different from what we've found at Oropesa. As every drill hole goes down, as every piece of geophysics happens, you get closer to understanding what's really going on. And then there comes a point of transition. Once again, this happens for every company, when suddenly you stop. The emphasis is no longer so much on exploration as proving that what you now found in exploration is actual fact. It's putting definite parameters on it. You know, how many tons you've got, what sort of grade you've got, and for a lot of geologists, that's the boring bit. That's when it's almost like a bureaucrat's job. You do the same thing day in, day out. A lot of us geologists, it's actually figuring it out, understanding it, and deciphering what is nearly always something unique. Oropesa is undoubtedly a unique deposit. Same for Santa Maria, it's undoubtedly a unique deposit. What we know about Oropesa at the moment appears that the mineralized structures extend over a distance of approximately 2 kilometers. And the width of these structures is just over 1 kilometer. So we have an area of 2 square kilometers which we're looking at intensely. Our investigation permit is 24 square kilometers in size, so there's a lot more we're going to look at. And we'll use geophysics on it, we'll do some exploration drilling on these things, and we'll be constantly defining targets for the foreseeable future. Whether we find another, let's call it Oropesa there, remains to be seen, but we'll look, and hopefully we'll be lucky. In any exploration company's exploration program, there are always risks. Some of the risks you can't foresee happening. I don't know, it could be an earthquake, it could be a hurricane, there are a lot of things which could be. But normally there are 2 big risks, one of which is the thing there and is it economic? That's a pretty obvious risk. And the other one is what part of the economic cycle you're in. As you know, mining markets are cyclical. If you go back not so long ago, the tin price at its low in the recent cycle was $10,000 a ton. Now it's approximately 3 times that amount. That's the cycle. Copper does the same thing. Zinc does the same thing. And to fund or to proceed at the bottom of the cycle is always much more difficult than it is at the top of the cycle. However, compared with most cycles we've seen since the end of the Second World War, this is always a dangerous thing to say. This time it's different because we have something called China and we have something called India. And we have probably the best part of 2.5 billion people in the Far East and Middle East who want to become and have standards of living like we do in the West. And their appetite for metals, particularly in the early part of the economic cycle, is huge. In the case of tin, there is definitely a structural shortfall of metal. I think most people will agree the same is happening in copper. We can't build mines fast enough to produce enough copper, and we haven't been able to find tin deposits anywhere in the world until hopefully very recently. I started up several companies which have grown to be large companies and been successful companies. But normally you start off with an idea and a concept, a few friends get together and you put in maybe $500,000. And it's very high risk and people are big enough to understand they could lose a lot. And then you develop the concept, the idea, or whatever it is you're trying to do, and you start growing. And when you start growing, growth is expensive. I grew a drilling company in South Africa from 1 drill to 42 in the space of 6 years, and it was expensive. And right at the end, we went public. As you become more and more certain about what you're doing or what you're finding, you need access to capital markets. And public markets are much, much larger than private markets. Some people would argue against that, but it is generally much easier to raise funding in public markets. If you have a mining project, and let's say it's a reasonable sized mining project, something which is going to, for example, mine 2 or 3 million tons per year from underground, and let's say the mineralization is quite close to surface, I would guesstimate that pretty typically you'll be looking somewhere in the order of $20 to $25 million Canadian dollars to get to feasibility. That's a very approximate figure. At which point you don't have to build the thing. And the question, how much would that cost, is how long is a piece of string? And the answer is probably going to be somewhere between $100 and $400 million. The dilution is basically is a reflection of two factors, one of which is the state of the market. If the world fell off a cliff like it did a couple of years ago, you're going to issue a lot more shares because your price is going to be lower, the metal price is going to be lower than you would say at times when metal prices are high. That's, once again, just is pretty typical. Obviously, you want to try and issue shares at a price which does as little dilution as possible. But having been through the process of lots of share financings and lots of other companies, one thing I'm always concerned about is that whoever gets involved or invests in you always has a chance to make some money. You want to first of all prove up the deposit. You want to know what you've got. And the second thing obviously is you hopefully are going to put the deposit into production, it becomes a mine, or the other alternative is you sell it to somebody. Those are the two objectives that every single exploration company has, is to find something which is viable, put it into production, or sell it. There's no rocket science in that, that's just the way it is. People who invest in exploration ventures or mining ventures are very well aware of the mine cycle. You get really two peaks in the value of the company's shares. The first one normally occurs sometime between pre-feasibility and feasibility. And then people know at the time of feasibility you're going to get dilution because you've got to raise a lot of equity capital. And then basically the news flow stops while you're building the mine, which is typically 18 months or thereabouts. Then you've got to get the thing into production. Typically mines always have a problem getting into production the way they want. This might take you 3 months, 6 months, a year to fix. And then the mine comes into production. And then you generally get recoveries improving, your tonnage gets pushed up a bit, and you eventually reach maybe a plateau of production. And the market feels comfortable about that. They see the cash flow, they're comfortable the cash flow is going to last a long time, and that's when you get your second peak. So a lot of people take a view that I want to be out between feasibility and pre-feasibility. And that's normally the correct strategy for somebody who invests in exploration companies to have. Well, drill results will be coming out on a regular basis. I'm not going to release drill hole results on one by one. They'll come out in batches, maybe of 6 to 10 holes at a time. I've just told you that there's going to be 500 to 1,000 holes, so you must take a view on how many news releases that's going to be. There will be other news releases as well on other subjects. Maybe, for example, when we decide to build a pilot plant somewhere, maybe if we acquire more ground. There will be a constant news flow. It's not going to be a company which maybe produces a press release once every couple of months and starves shareholders of information. There's going to be a lot of information coming out, and it's going to come out on a pretty regular basis. I can't tell you whether it's going to be 4 or 5 press releases a month, or whether it'll be 2, but it certainly will certainly be more than 1 per month.